A stock trader or equity trader or share trader is a person or company involved in trading equity securities and attempting to profit from the purchase and sale of those securities. Stock traders may be an agent, hedger, arbitrager, speculator, or stockbroker. Such equity trading in large publicly traded companies may be through a stock exchange. Stock shares in smaller public companies may be bought and sold in over-the-counter markets or in some instances in equity crowdfunding platforms. Stock traders can trade on their own account, called proprietary trading, or through an agent authorized to buy and sell on the owner's behalf. Trading through an agent is usually through a stockbroker. Agents are paid a commission for performing the trade. Major stock exchanges have market makers who help limit price variation by buying and selling a particular company's shares on their own behalf and also on behalf of other clients. And it has many other distinctive characteristics. Apart from the economic advantages and disadvantages of stock exchanges, the advantage that they provide a free flow of capital to finance industrial expansion, for instance, and the disadvantage that they provide an all too convenient way for the unlucky, the imprudent, and the gullible to lose their money. Their development has created a whole pattern of social behavior, complete with customs, language, and predictable responses to given events. What is truly extraordinary is the speed with which this pattern emerged full-blown following the establishment, in 1611, of the world's first important stock exchange, a roofless courtyard in Amsterdam, and the degree to which it persists on the New York Stock Exchange in the 1960s. Present-day stock trading in the United States, a bewilderingly vast enterprise, involving millions of miles of private telegraph wires, computers that can read and copy the Manhattan telephone directory in 3 minutes, and over 20 million stockholder participants, would seem to be a far cry from a handful of 17th-century Dutchmen haggling in the rain. But the field marks are much the same. The first stock exchange was, inadvertently, a laboratory in which new human reactions were revealed. By the same token, the New York Stock Exchange is also a sociological test tube, forever contributing to the human species' self-understanding. The behavior of the pioneering Dutch stock traders is ably documented in a book entitled Confusion of Confusions, written by a plunger on the Amsterdam market named Joseph de Lewege. Originally published in 1688, stock traders may advise shareholders and help manage portfolios. Traders engage in buying and selling bonds, stocks, futures and shares in hedge funds. A stock trader also conducts extensive research and observation of how financial markets perform. This is accomplished through economic and microeconomic study. Consequently, more advanced stock traders will delve into macroeconomics and industry-specific technical analysis to track asset or corporate performance. Other duties of a stock trader include comparison of financial analysis to current and future, regulation of his or her occupation. Professional stock traders who work for a financial company are required to complete an internship of up to 4 months before becoming established in their career field. In the United States, for example, internship is followed up by taking and passing a financial industry regulatory authority-administered Series 63 or 65 exam. Stock traders who pass demonstrate familiarity with U.S. Securities and Exchange Commission compliant practices and regulation. Stock traders with experience usually obtain a 4-year degree in a financial, accounting or economics field after licensure. Supervisory positions as a trader may usually require an MBA for advanced stock market analysis. The U.S. Bureau of Labor Statistics reported that growth for stock and commodities traders was forecast to be greater than 21% between 2006 and 2016. In that period, stock traders would benefit from trends driven by pensions of baby boomers and their decreased reliance on Social Security. U.S. Treasury bonds would also be traded on a more fluctuating basis. Stock traders just entering the field suffer since few entry-level positions exist while entry into this career field is very competitive. Increased ownership of stocks and mutual funds drive substantial career growth of traders. Banks were also offering more opportunities for people of average means to invest and speculate in stocks. The BLS reported that stock traders had median annual incomes of $68,500. Experienced traders of stocks and mutual funds have the potential to earn more than $145,600 annually. Contrary to a stockbroker, a professional who arranges transactions between a buyer and a seller, and gets a guaranteed commission for every deal executed. A professional trader may have a steep learning curve and his ultra-competi